All right, it's AM Week Starter edition of News Express. Good morning and welcome. It was quite an interesting past week. Of course, we did a round-off of last week. If you haven't already done so, please go on our website, www.africabusinessradio.com, to listen to our previous podcast on News Express. It's a new week, big stories, and I've got them all together on this week's edition of Business AM. So let's get right into the stories in the paper. Nigeria's quick recovery not likely, says Chukwu CAML chief. That one, he is development economist and financial expert. The following headline: stakeholders say awful tariff adjustment to punish citizens. NERC plans another hike from July 2021. And over to the summary section of the paper, we have WB projects 1% growth for Nigeria. That's World Bank. Coronation see crawling AFX rate pegs. And Bar Cement eyes dual listing. Catch these on page 3, 10 and 25 of Business AM this morning. All right, let's bring in Philip Isakwa. He's the publisher of Business AM to join in for conversations. But just before we get onto him again, looking at the paper, of course, is the story on the tariff adjustment, which we're expecting to see sometime in July. And the question is, some time ago, that was sometime in October, there was supposed to be a talk about whether or not there should be a hike in tariff. And we've had conversations about this in the analysis over the past week. We've talked about whether or not this is even feasible in the first place. We've talked about how much will be too much for a hike in tariff at this point. We'll be having Philip Isakwa join us in just a moment for us to get his thoughts on the matter right now. All right, still on the paper now, just before we get back on Mr. Philip. So the last 5 years, Nigeria has witnessed about 3 tariff increments. Now, these tariff increments were tendered to 11 distribution companies in the template for review of tariff. We've seen increase or decrease, ought to be reviewed twice a year, and the results of such a review are to be implemented every 6 months. There was also a further push for an increase sometime in June 2016, of course, in the face of indices such as inflation, such as foreign exchange rates, and a spike in gas prices with a lesser generation capacity. Although the Regulatory Commission, came out to say that this was due to restraint and ineptness, which led them not being able to implement at least 9, of these tariffs on a biannual basis, which then accumulated up until last year. But then, what move will they make in July 2020 according to this headline? What more will be implemented? We're still trying to get back to Philip Isakwa. But then again, there are other really interesting stories on Business AM right now. Quite a week for the Nigerian currency, which leads me to the headline on page 11, which states that the Naira weekends on street. AFEX reserves climbed to $35.7 billion in the first trading week, and that's on some sort of optimism. You might want to check that one out on page 11 of Business AM right now. Philip Isakwa is also going to give us a review of the Naira's position last week and what the projections will be for this week. We'll go on a short break, and when we return, we'll get back Philip Isakwa on the line.
You're listening to Africa Business Radio, where you get up-to-date insights on the Africa business landscape.
We have Mr. Philip on the line. So sorry about that network bridge there. So, Mr. Philip, I was talking about the headline on the cover page, the one about the tariff increments. Of course, over the past 5 years, we've seen that Nigeria has actually witnessed about 3 tariff increments, and they were tendered to the 11 distribution companies. And that's we can find that one in a template for review of tariff. Increase or decrease ought to be reviewed twice a year, and the results of such a review are to be implemented every 6 months. There was also a further push for an increase in June of 2016, and we had to also look at indices like the inflation, the foreign exchange rates at the time. We also had to deal with the spike in gas prices and all of that. And let's still look at other headlines in the paper on Business AM this morning. We have the one on page 13. This one's a big question. Now, the time for Nigeria to move into higher gear, and we've had a lot of analysts talking on this. We've had a lot of analysts talking on this one. The 2020 will be remembered, and they've given us several reasons why that should be the case. And a headline beside that one, still on page 13, dollar kicks off 2021 on back foot, gold shines. Dollar kicks off 2021 on back foot, gold shines. We've been quite quiet about the performance of the gold, but definitely going to be looking into that much later in the analysis this evening. Stocks set for more record highs. It's a new week, and of course all eyes on the market to see what performance will be like for trading this week. And we also have the 2021 outlook on page 14 of the paper, giving us what to expect in the Nigerian insurance industry, which is projected to undergo a shift, emergence of new insurance markets in Nigeria. AXA Mansard optimistic over 2020 returns despite year's crisis. All of that and more you can find on page 14 of the paper. All right, we'll have to continue looking at the headlines until we are able to get him right on track. Now, how startups in emerging markets succeed despite scarcity. That one is right on the Executive Knowledge series of Business AM this morning, right on page 15 of the paper. All right, we've got Mr. Philip Isapa back on the line. So sorry about that one there. So please take us through the headline on the cover page on the electricity hike.
Okay, so we're talking about pricing, which is all to do with this tariff situation. Now, when the power sector was privatized, the investors actually reached an agreement, for costs to be reflective. Now, because power was subjected to kind of a social pricing, right from the start. That was one of the reasons why you had a lot of challenge with provision of electricity. And then having given it, having privatized it and have investors put in money to buy those assets, they had reached an agreement to allow the social way of pricing electricity, to give way, to what you call cost reflective tariff. Now, one of the things that was built into the arrangement was this MITO, which was supposed to be review electricity pricing every year, and then look at all the factors that could determine. Just like you have the template that is used to price petroleum products, because we import. There are a lot of things that go into the pricing of what you call petrol. So the same thing was built into what they call multi-year tariff order, the MITO multi-year tariff order. Then was built into the agreement, so that they can review and see the different factors that could enable whether a review downward or a review upward, So what we are seeing is that it has taken quite a long time for this to come into place. While the regulator has taken some time to review pricing, it has found it difficult to actually implement in the way it ought to do it. So in 2020 or so, September, October, November, what we saw that was about to be implemented or that came into being starting from 1st of January, which the Minister of Power has now suspended until 31st of January, was after a review of the MITO, there was a need to increase. And that increase of tariff is what came to be. But recall that what I'm trying to say is that part of the review also means that you have to implement this thing every 6 months. So notwithstanding what has come up, right? What has come up this January, which is not actually cost reflective. Is that in July there's going to be an attempt to implement what you call cost-reflective tariff, which is to allow the investors or the power generating or power distribution company, to price electricity on the basis of how it costs them to produce and distribute. You have the Gencos who produce, and then you have the distribution companies who distribute. And in all of this, there's cost involved. Distribution companies go to get electricity, and then this costs them money. And then the pricing is what they now want to implement what they call cost-reflective tariff. To bring this into being. But what will happen in July when this comes into being is that it might even be higher. That's what the point we're trying to make in that story. That the cost reflective tariff will now, it's almost like saying you're opening it up to the market, call it market forces loosely, because it is going to be based on the cost that goes into generating and distributing electricity, and then you have it being higher than the normal some kind of social inbuilt pricing mechanism, that allows for some care, to go into it.
All right, now let's move away from that story. It was quite a week for the Nigerian currency, of course, which leads me to the headline on page 11. The one about the Naira weakening on streets, the FX reserves climbing to $35.7 billion in the first trading week on optimism. Now, give us a quick review of the Naira's position last week and what should we expect for this week?
Now, the Naira weakens, when we say weakens on the street, again, we don't like to use the parallel market stuff. It's the unofficial market, which is the street trading of Forex. So it weakened, it weakened slightly. We lost two naira to the dollar last week. Now, but the good news is that oil prices, oil prices appear to be picking up. At the close of last week, we were hearing between $54.4 per barrel to around 55, 56, or in some cases 57. Dollars per barrel. Now that is good news. So it's good news because it will increase the forex reserves, and the forex reserve of Nigeria, and that will provide a lot of cushion, for CBN intervention in the foreign exchange market. Now the exchange rate has been an issue. It has been an issue because of the multiple exchange rates that operate in the economy. You have, of course, many people will think that the street market provides a better view of the rate situation. The CBN governor was angry the other day that people were using the parallel market or the street market, to judge the value of the Naira. But it is neither here nor there. Recall that the CBN, Nigeria went to the World Bank to try to get some facilities, and one of the conditions that they gave was that we need to do away with this multiple exchange rates that operate in the economy. But the CBN has come up to say that it will not do that, in one big announcement. So what it is doing, again, you will see from one of the stories about Coronation Merchant Bank analysts are saying that CBN is taking a step-by-step approach. You recall that sometime last year there was the CBN weakened the Naira, and then I think last week or 2 weeks ago they also did the same thing. So in one of the markets, one of the exchange windows, the Naira is doing 410, 410 to the dollar, and what we're seeing is that CBN is going to try to continue to use that system, to try to normalize. Will not wake up one day and say the exchange rate is now a particular amount to the dollar. Will not, in other words, will not wake up and say it is devaluing and that is the common rate that will rule the market. So we expect to see a gradual. This is the beginning of the year. Demand for forex might begin to pick up. But it's a good thing that reserves are building up gradually, and that crude oil prices are appreciating. Better than budget estimate, and then which means that more money will come into the system, and then they'll be able to hold the Naira firm.
All right, let's draw the curtain at this point as we await your review of developing stories on Friday and a preview of next week, of course. Thank you so much, Mr. Philip Isakwa.
Thank you very much, Rachel.
Mr. Philip is the publisher Business AM, Nigeria's fastest growing financial and business newspaper. The market analysis comes up in a bit. Stay here.